Welcome to the fourth video in this series, guys, where we're going to talk to you about swing trading, and I suppose, uh, perhaps to your surprise, we're going to be telling you that it's nothing special. Alright, so there is no holy grail when it comes to trading. You may hear things on websites that say what you really need to be doing is swing trading or range trading, or you need to be scalping, or you need to be trading this system or that system to be successful. And really what we want to show you here is quite simple. It's about what we've been talking about, which is price action at key levels, looking for swing points in the chart. So swing trading is really just a new, different definition for the same thing. And what we're going to look at here is a price action signal on the daily chart on Citigroup, which could be categorized as a swing trade. And just quickly really highlight how you could trade it and how you could trade it differently to some of the other signals that we've looked at. So the signal we're talking about is this pin bar right down here. You can see that that's formed through a very key support level. There was rejection previously here, and it acted as resistance here before price broke through in January 2013. And this was really a very well defined pin bar here. It kind of formed on a bit of a retracement, as we discussed before, so price had been moving up higher for 2.5 months before people decided to consider taking some of their profits. Sold off over a couple of days, but then dropped this pin bar here at this key level. Now the brilliant thing about this opportunity is it gave us a chance to get a really good entry with a tight stop loss. You could have entered this here long there on a bit of a retracement of that pin bar with your stop loss just down here. And this would have been a really good signal to a really good setup to try and play for greater risk reward ratio. So you could have perhaps even gone for 1-3 or 1-4 on this trade, which perhaps isn't always possible on others. And the way that could be traded would be to look at this move here and try and trade the extension. So if we say this moved up 400 points roughly from 3,800 to 4,200, we could look for another, say, 400 point extension from the retracement, which would take us up to around from 4,100 to 4,500, so up to about here. And I don't think that's unrealistic. I think that's fairly sensible. The only thing I would say, following on from the video before where we talked about trading a 1-to-2 risk reward ratio and not being excessively greedy, is the way we do this is move our stop loss to break even when we reach our 1-to-2. So rather than taking profit, we'd move the stop loss to break even and just let it run. What you can see obviously would have happened here is we'd have banked sort of 4 times risk as our profit in just 1, 2, 3, 4, 5, 6, 7, maybe 8 days time, so about a week and a half. So this really shows how you can use the concept of trading swing points, which is where this pin bar is formed, or the low of a retracement at key levels with really well defined price action signals, and bank some really big profits in a short period of time. So we're not really going to go into the details. We've talked about the intricacies of how we plot these levels, how we define our signals, how we plan our entry and exit in the previous videos. So this was just to talk to you about a different setup, a different definition for the same thing, and show you how you can really benefit from trading the methodologies that we teach at nysecommentary.com. So please check out the website, guys. We post our daily commentary on the website every day before the New York Stock Exchange opens at 2:30 GMT. So please do check that out. Follow us on Twitter, follow us on Facebook. And thanks for watching, guys. We'll see you in the next video where we're going to talk a bit about range trading. And yeah, thanks for watching. Good trading.